we're really happy to have you here with us this evening. We're gonna get right into it. So let me just see here. So are we ready to go, Denisha, with everything?
Yes, ma'am.
All right, awesome. So so tonight you are you we're what we're going to do is talk about leveling up your 2021 budget, especially now, you guys, where there's so many things that have been happening for for this year. Besides the COVID, it's just even just the effects of COVID, not what happened to us physically, but also some of the things that have happened to us financially, whether we were laid off, got our jobs cut back. And so a lot of us had to be very much more mindful of our money, about what's coming in, what's going out, especially for those whose incomes you were just basically running your household on. You're running your household on unemployment. Okay. Unfortunately, some people were laid off, and you were running your household based on a severance. Okay, or you may know somebody that was doing that. So tonight we want to just dive right in to talk about leveling up your budgeting, and also talk about the savings challenge. Yes, the savings challenge is back. We heard your pleas, okay, and we heard your cries, and also your wonderful feedback. And so Denisha is going to take the helm and cover that a little bit about tonight too. But before we begin, what we wanted to do was to do a fun poll. Okay, so you wanted to do a fun poll, so you can tell us a little bit about where you are, all right, in terms of your saving and your budgeting. The answers are completely confidential. We won't be able to see them. Okay, so what we're going to do is just to pop up the poll. Okay, so now here's the poll. Again, the answers are confidential, but let's see where you stand. So when it comes to saving my money and budgeting, okay, which one sounds like you? All right. What budget? I see it, I want it, I buy it. Listen, I believe that's an Ariana Grande song. I actually I actually like that song, okay? The other ones, listen, I make good money, but still don't know why I don't have money in my budget, okay? Or are you the third one? Actually, you know what? I thought that these are going to be lettered. It looks like they're not, but hopefully they'll still be able to toll the results. All right. Um, the other one is, oh my God, budgeting makes me anxious. I don't even want to see what's going on. Are you type, that kind of bears your head in the sand? And you're gonna kind of keep your fingers crossed, and whatever happens, happens. Or are you just bossing your budget, and your savings, that you have your own nice little spreadsheets, or something that you put on Excel, or you have a special journal that you use, or even some fancy apps to help you keep your money on point. So when it comes to savings and money, okay, which one sounds like you? And so we'll leave that up for a couple of seconds. And Denise, you can kind of give me some feedback to see
Yes,
if the
ma'am.
results are
We have
coming in.
about 28 people responded out of 41. 10 more to
Okay.
go. Come on, guys. We're almost there.
Yep. So when it comes to saving money, where are you at? Again, just so you'll know, um, these are completely confidential. We cannot see who selected what answer. We love to get feedback, even if it's in a fun way like this. Okay. All right. So it looks like, all right, looks like a lot of you guys are bossing your budget. That's what's up. So you know what? Listen, you guys who are bossing your budget, I'd like for you to kind of help out those individuals that may need some help. So if you have any suggestions of apps and stuff that you use along the way, we like to keep it fun. Please pop that info into the chat box. Again, this is a collaborative effort. You want to be able to help each other out. So 45% it says a boss, 22% of you want to, you got your fingers crossed, and 28% are wondering where the heck the money went. It comes in and it goes out, and trying to figure out, why it's not there. So we're going to be answering. So we're all set with that. Denisha, we can go back to the slides. We appreciate you, you guys taking the time to do that. We're going to be addressing everything. So if you're doing better than most, you're going to be able to kind of level it up. And if you're not doing so great, we're going to hopefully give you some things you can apply right away, to do that. So as you can see here on the screen, what happens is that money comes in, and as fast as it comes in, it goes out. Okay. So I don't know if anybody can, can relate to that. It seems like as soon as we get it, it's flying out of, out of our pocket. So how do we address that? Next slide, Denisha. All right, so let's talk a little bit about what a budget is. Okay, simple definition, basically it's just having balance of what you have coming in and what you got going out. Usually the issue is that, you can go to the next one, please. Usually the issue is, because we're going to move it right along. Usually the issue is that we have a lot more going out than we have coming in. However, a lot of times the issue is that we just don't track it properly. Okay, because it's too sometimes too overwhelming. We don't know where to begin, what kind of category it should go into. Should I be throwing it all into one account or have multiple accounts? Okay, let's talk a little bit about the benefits of tracking and stacking your income. Because again, in order for us to stack it, we must track it. But there is no way that you can stack what you don't track. Okay, so number one, one of the benefits of that is to help you get a grip on your spending. Listen, there's nothing wrong with spending your money, spending or investing or savings, whatever you want to label it. There's nothing wrong with doing the things that you want to do with your money, as long as it's not compromising the things that you need to do. Okay, but you got to do something. Because number two, other benefit of that is saving for the long term. You guys, tomorrow is coming. Now, unfortunately, some people may not make it till tomorrow, depending on where they are, right? But for the most part, when we're young and we're healthy and we're here for a long time, tomorrow's coming. Listen, I mean, where am I? Listen, if you're a Gen X, where you at? Gen Xers, they were born between, 68 and like, what is it, 68 to 79. Gen Xers, you guys out there, if you're a Gen X, pop Gen X in the chat box. Okay, because Gen Xers are hovering around like between 45. Hey Tanya, we got another Gen X. The Gen Xers are like 40, 45, 50 to 55. Those are the Gen X's. Okay, where you at, my Gen X's? Type in Gen X in the chat box. Okay, if you think about it, right? If you think about it, look how fast 40 came. Look how fast 45 years old. Wow, there's a lot of Gen X's on here. 45 came. And when we were like just 19 or in high school or in college, it moves really fast. So again, the idea is that we want to save for the long term, because long term catches up very quickly. Okay. Number three, know exactly. So there's a lot of Gen X's on here. It's nice to see that. All right. So number three, you want to know exactly where your hard-earned money goes every single month. A lot of times we don't know. It may go to some of those things on the left, as you see there. And number four, benefits of tracking and stacking your income, you guys, will help you avoid debt and getting bad credit. And so, I'm a big proponent, for those of you that have been here on a regular basis, you guys know that we're a big proponent of getting rid of debt so we can stack our wealth. But let me show you something on the next slide that shows you why budgeting could be a good way for you to build credit. Yes, you didn't read that wrong. Having a budget can help you build good credit. So for those of you that 20 some odd percent, that may have difficulty and you're crossing your fingers because you're getting anxious, listen up. Okay. So do you understand that if you put together a good budget and you followed it, right, and your credit is not so good, and you know that you can't get any more lines of credit because your credit is shot or your debt to income ratio is off, but you want to build credit, but you want to build good credit, you guys, you can get a secured loan. Okay. You can go out there and get a secured loan through your credit union or through your bank. So let's say through your budget, once you started listing out all your debts and your expenses, and you find out that you have, like 50 or 60 extra dollars every single month, and you've been, and you can put it away. Do you understand that if you, so let's talk a little bit about what a secure loan is, first of all. All right. So secure loan, all that is just a loan that's secured by your cash. Okay. Your assets, whatever cash that you have that's sitting in your savings or checking account. The institution will loan you, okay, as it says in the first bullet point, it'll loan you equal or up to the amount that's in your checking or savings account. Okay. So if you didn't have any extra cash, and you went through your budget, and you know that somewhere you want to try to build credit at the same time, man, imagine freeing up 50 extra bucks in your budget. $50 a month is $600. So even if you want to maybe a small loan to kind of build up credit, if you got $60 in your savings account, they'll loan you, I mean, excuse me, $600, they'll loan you 600 bucks. Okay. They can loan you $600. Number two, as a bullet point says there's no credit check required. So they don't pull your credit for a secured loan, but they'll post. Okay, they'll post every single month as you're making your payment. Again, you got $2,000 in your savings account. They'll loan you up to $2,000 or maybe $1,000. Okay, so again, the bank will post your credit history every single month. Okay, and the great thing about why I always prefer, here we always talk about getting a secured loan, not a secured card. Okay, with the secured loan, there's no fee, you guys. There's no fee. Sometimes with the secured credit card, it's like a $35 or $50 fee. Okay. But with the secured loan, there are no fees. And you guys, the rates are so low. Anyone out there rocking a First Premier card or anything like that, or those cards, those fancy schmancy cards they have out there, that you may have gotten, because your credit wasn't so good. The interest rates on those things are ridiculous. Okay. But if you go out there and you get a secured loan, and you secure it through whatever you have in your checking and savings account, that's a great way to go. However, you got to still make sure you pay for it, right? You still got to pay for it on time every time, because maybe they don't pull your credit to post, but they will post if you're late. Okay, they will post if you're late. So again, take a screenshot of this. If you know somebody that wants to build credit, or if you have children like 18, 19 years old, or you yourself are trying to reestablish yourself in the credit world, but you don't want to get your credit pulled, this is a great strategy how you can get on point with your budget, because you may not have the cash, but you can go through your budget and try to find cash and set it aside, and then be able to help you build credit. Like I said, we're always dropping gems. So you thought that we weren't going to go over no debt stuff, right? I always try to tie, and that's why I keep saying you always want to show up here, because even though this is about budgeting, I still threw in something there about debt. And yes, I'm going to talk about wealth building at the end inside this slide as well, because again, regardless of what the topics of discussion are, you guys, we still like to throw other nuggets and other gems in here. Okay, other gems in here. So again, to keep you coming back, but that's why I said you don't want to ever miss what we got going on. Next slide, Denisha. Thank you. All right. So now that we talked a little bit about how following a budget can help you build credit, we'll go on to the next slide, and we'll cover about how you get started on doing that. All right. So I believe that we skipped the slide that we need to go to step 1 before we go to step 2, please. All right. So here we go. So how do you start a budget? All right. The idea, again, let's take a look at what's coming in and what's going out. All right. So this usually is an eye opener for most people, right? There's usually an eye opener for most people, because they're shocked. They're just like when I sit down with my clients and we're going through the budget, they dread this part. But I'm like, no, get excited, because I'm gonna help you find money. This is what we do here at Building Black Wealth. We're not here to shame anybody. We're here to help you level up. It's all about those who do okay, want to do better. We want to help you do that. And those who better that most want the best. And that's what we do here. Okay. So number 1, we want to gather up every financial document you have. Okay. You can do that. If you do your online banking, you can kind of pull up your statements, or if you get paper, you can do that too, right? So all your bank statements, all your investment accounts, your savings accounts, your utility bills, again, everything, all your stuff that you have to cut checks for, or the things that you get checks to you. Okay. Then what you want to do, once you get everything, you want to create a list. So either, again, if you want to use a spreadsheet, you could do it, or you can just go old school with a pen and a pad of paper, and you want to list out all your debts and your expenses, how much you pay for your mortgage, your rent, your car payment, your life insurance, your car insurance, your auto insurance, your food, your utilities, your entertainment, anything you do for dining out. You know what, I love it, you guys. Keep that chat box blowing up, because Denisha, you can help me monitor that, especially if you guys have questions. We will get to your questions at the end. So definitely, please. And we'll also share your comments. I love that, you guys. Definitely use the chat box. I say those are a couple of my regulars that use the chat box. I appreciate that, you guys. All right. Number now, once you did that, now you want to list what's coming in. So now you gathered up all your documents, you made a list of what's going out, but then now you want to make a list of what's coming in. All right. So all your side hustles, child support, alimony. Listen, ladies, right? Especially ladies who got may have been divorced. Anybody divorced out there? It'd be nice to get an alimony check, right? Especially especially now. You can get child support and alimony. See, we have to kind of level up some of our choices here, right? So get some extra money coming in. All right. So once you make a list of, all of that, now we can see what total number is higher, right? How much when we total up all of that, we can kind of take a look at that. So all right, so let's go to number step 2 and let's figure out what the totals are. And then we're going to dive right in. We're going to share the screen with you and we're going to give you an example of the budget sheets that Denisha did an awesome job. She helped me level up the budget sheets for my clients. So, and if any of my clients that are on the line here, if you recognize the budget sheet that's going to come up in a minute, you have Denisha McDonald to thank. Again, this is why I love collaboration. Again, collaboration makes each other better. All right, so now that you have a list of everything that's coming in, everything that's going out, you want to total it up. Okay, now if the income is greater, okay, the income is greater than your expense total, then listen, you're already off to a great start. However, if it's flip flopped and upside down, then we need to talk. But now let's say that it is good. You are off to a great start, that you have more coming in than you have coming out. Now you can put some extra money towards long-term wealth building or the famous savings challenge. So now a lot of you guys had expressed that you love the savings challenge. Some of you may have fallen off the savings challenge. Okay. But we wanted to bring it back because we heard and then we heard some of your feedback. And so what I'm going to do, I'm going to turn it over to my amazing co-collaborator, Denisha McDonald of Our Village Initiative. Okay, again, if you guys are enjoying the content so far, feel free to send out the link so other people can hop on. Okay, so what Denisha's going to do, she's going to show us, okay, a little bit about, again, what the budget sheet looks like, but also how you can participate in the 2021 savings challenge. Okay, so I'm gonna, because this is her baby, she put a lot of time and effort into it. So I'm going to turn off my mic, and Denisha, take it away.
Thank you. Hi, everyone. So we are going to do the savings challenge again this year because we had a great response last year from people, and he said it helped them really think critically about their budget and finding ways in which they could save. So the goal, it's pretty simple. We want to work with you to help you create your budget and find that extra money. And I believe in the set it and forget it, and then work harder to find more money after, but at least get your bare minimum down. The goal is so that we figure out how much you can save or you can commit to saving every month, whether it's $50 or $100. Some people can do more, and set that on auto pay directly from your job. So pretty much from HR. Once you do that consistently for 12 months, so we start in January. If you start sooner, that's fine, but we'll be counting your deposits from January to December of next year. If you've done that where you've made a deposit every month, then you are eligible to win $1,000 in December. We will have a drawing to pull one lucky person from this group of people who have been committed so that you can potentially win $1,000 to add to your savings goal. We want to help everyone save at least 1,000 on their own. And then save more if you can afford to. But at least we want people to get to 1,000, and I would love to bless someone else with an extra $1,000 to their savings goal. So again, you can register at buildblackwealth.us. That's buildblackwealth.us to sign up for it. It's pre-registration right now. You can start the process, but we will actually be launching come January 1st, where we're counting, and really that's when all of your deposits matter, essentially, for the challenge specifically. So now give me one moment. Let me pull up. Do you guys see my screen with the savings challenge on it? Let me see. Hold on. share. And I'm going to screen share again. And now we come here. Okay. So you should be able to see my screen. So what we did was create, if you are a pen and paper person, this spreadsheet, you can literally, I will create it so that it's also in a PDF. So you're just filling it out by hand if you prefer to do pen and paper. If you prefer to do an app, there are apps out there, mint.com. There are a few apps that you can download that allow you to track your budget as well. And for those of us who like to use spreadsheets, then I created a spreadsheet for you. So what you would do is enter up top your income, all of your sources of income, and you can add, if you have more than four, then you can insert and add another source of income here. And I'm going to add numbers in so that you guys can see. As you add numbers, I already pre-programmed the spreadsheet to tally everything up. So you don't have to do the math yourself, which is why I like this over doing it handwritten, but you can if you choose to. So everything is tabulated for you. You go down the list and anything that applies to you here in your estimated monthly expenses for housing, for family, transportation, we want you to go in and fill out how much that is for your budget, right? We should, for the most part, have, if you are employed, a W 2 employee, a set income that comes in for the most part every month so that you can create your budget or your goal in this first column. And then what we want you to do is every month, whether it's at the beginning of the month or at the end of the month in preparation for the following month, to log how much money you actually spent. So here would be your budget. So, you know, rent, let's say it's 2,500, that's how much you budgeted. And then in the middle of all of that, you actually moved. So your rent went up or it went down. So it turned into 2,400 in January. Then you would track all of those changes. If your cell phone bill changes, mine changes by a couple dollars every month, depending on kind of what apps or anything that's downloaded. You can add that in there. And again, as you see, the spreadsheet tabulates everything for you. So it makes it a lot easier for you to kind of figure it out. And I spent more than I made. Let me adjust that right here because I want you guys to see kind of how it works. 1,000. Okay, so you enter in all the numbers, and then when you go down here, after you've entered everything, it shows you your income, your liability, and how much you should have at the end of the month for saving. So that, again, if we're trying to track our savings, we have to be real with ourselves and look at how we're spending money. So every month you should be going in and checking all of your credit cards, all of your receipts, and making sure you balance your budget because we want to make sure that there's something here every month. Next, I created another spreadsheet. Can you guys see it or is it really tiny? Let's see if I can make it a little bit bigger for you. Perfect. So
Yeah, we can
I
see it.
also track my credit cards and student loans so that I know what kind of the payout, when I should be expected to pay it off, my utilization. Because once we talk about credit, you guys know that how much you use your credit card or the percent of utilization on your credit card affects your credit score. Ideally, they want you to be at 30% or less. So if you had a credit card with a limit of $1,000, you do not want to spend over $300 or have $300 reported on your credit every month because that's how you maximize your credit score. Once you go above that 30%, your score can drop a little bit. And the closer you get to maxing it out, the lower your credit score will be. So this helps you kind of figure out. And when I'm doing my budget every month and trying to figure out where do I put extra money, my strategy is I always go for the ones with the highest utilization so that I can get that down. So my credit score is always kind of balanced. I don't want it to go below a 650. So here, I want you guys to write out your credit cards. So if you have an American Express, you'd write American Express. You write Chase, you fill it in, you fill out your credit limit and what your balance is. It will automatically tabulate what your utilization is, and we want you to write what your minimum payment is. So whether it's $50 a month, And then we also want you to say how much do you actually send. So some people, although the minimum is 50, they might send $500 or they might send $75. We want you to write that down as well. And also for tracking purposes, we want you to also write down your interest rate. I don't think a lot of us pay attention to how much we pay in interest every month, and it's really important to also pay attention to that. So also we want you to document your interest rate. And Michelle, we talked about it in previous sessions. We'll talk about it again next year. Every 6 months, I call and say, hey, I've been a really great client of yours for a number of years. I've never missed a payment. Do I qualify for, or do you have an interest rate reduction? Can I get a better interest rate? Or do you have any specials that I can benefit from? I've gotten interest rates reduced by 10% for a certain number of months where they put you on kind of like a payment plan. I've had some people where they suspend, they can skip a payment. When you speak with them and you are like a documented great client, they're definitely more willing to work with you to negotiate some sort of incentive in terms of the interest rates. So here again, I want you guys to go through. It's two worksheets in here. The first one is a budget. This one is to really go through your payments. And I would say the things that show up on your credit report are what ends up here. So credit cards, car payments, student loans, personal loans. These are things that end up on your credit score. So I pay attention to them because it matters. Like anything goes wrong on this part of your spreadsheet, you can guarantee you're going to have a lower credit score. If something goes wrong on this spreadsheet, it's going to affect that one as well because that means you're missing payments somewhere. Okay. Any questions
Awesome.
on that?
Yeah, there are some questions that came through that through the chat box, and of course, they're like the normal ones is where can we get this and are this being posted? And
Yes.
this is what I'm saying. This is what we love to share. However, we also know that the information is nothing if you don't apply it, right, Denisha?
Yes. Yes. So as part of the savings challenge, I am going to send it out to you, but as part of the savings challenge, we are going to have that monthly kind of an email and a check-in with you guys to make sure you're actually spending time entering your numbers into your spreadsheet or on your paper and pad into your app because we want you to actually track this information. If you don't track it, it's kind of, yes, you're saving your $50 a month, you're in the savings challenge, but that's not it for me. I want to know that you're doing the best that you can. So whether you say I want to save $100 a month and that's kind of your bare minimum, if we go through your budget and you really could be saving $300 a month, why aren't you? And that's the goal. If we're trying to have, financial goals for 2021 and you're saying I want to buy a house, I want to do this, you need to save for those things. So we want to make sure that we're challenging ourselves to save even beyond. You set the minimum because we know you every month you can comfortably meet that. But once we find ways and months where you have extra money, be disciplined. It's not buy new shoes. It's not go on a make the sacrifice for the year so you can accomplish your goals.
Right. And we also know not everybody's going to take on the savings challenge. We understand that, but again, we brought it back because we had a lot of people that asked, and there was one lucky winner that received it. And I mean, where can you go put in 1,000 and get $1,000 back and get and earn another 1,000 in 12 months? You can't even do that in the stock market. you can't you can, especially now you can't even do that in the stock market. I mean, okay, so okay, if you own Zoom stock, for those that want to try to challenge me on that, right? Yeah, so if you owned Amazon stock or if you own Zoom stock, but who's cutting a check? You guys cutting a check for 3 grand for one share? For Amazon stock, I'm just saying because that's how much it is around that, right? Maybe $2,100. So
I
anyway, so again,
think I'm
the
gonna go
idea is
in there though. Now they have you can I forgot what it's called though. You can buy like
fractional
a
shares.
portion. There we go, fractional shares. So even if you can't afford the $1,500 for one share, and you could afford $100, you can get
Yeah.
a piece of that and still
and
get.
and let me just make a quick disclaimer, even though this is not an investing part, even though we are going to go touch a little bit on that, okay? Because again, our seminar is called building black wealth. It's wealth, not surviving. We want to help people build wealth. In order for you to build wealth, you have to be able to track your income. Your income is what converts into wealth. This is why budgeting is so important. This is why
Mhm.
getting out of debt fast without going broke is so important. And for the wealth building part, that's why you also must level it up and invest your money. I don't care if you're putting in your 401k or your 403b, not a pension. Pension's different. Again, if you want to know a little bit more about that, why it's different, you can hit us up on our email. But that is not a real investment. Okay, I don't care what anybody tells you. All right,
After
it's too
this, we'll play
conservative.
around with it.
That's another topic. But the idea is to be able to stack your wealth, so you can have options, so you don't have to be working, go from 9 to 5 to 65. I know there's some millennials and Gen Z's. Listen, where my millennials and Gen Z's at? If you're a millennial or Gen Z, put yourself in the type in the chat box. That's everybody who's between 18 and like 30. I think 37 is the cutoff. Okay, 18 to 25 are Gen Zs. Between the 25 and 35, 37 are the millennials. If you got any Gen Zs and millennials, where you at? Just type it into the chat. Okay. All right. There we go. Love it. Hey. I love it. Perfect. Perfect. Again, you guys are our future. We do it for the baby boomers and for the Gen Xers like myself, but we do this also for you guys, because you guys are up to your eyeballs in credit card debt and student loans and things like that. And it's going to be a challenge, for you guys to build wealth if you're being bogged down by that and no one's showing you, and you're not going to get this information in college. It's just not. This is why we're so proud of you guys that come on here and you pay it forward to other ones. All right. So now here we are for number 3. So now that you created a budget, okay, you make sure you review. Aaron's an honorary millennial. Okay, you make sure you guys review that budget often, to make sure that you're staying on track. Once again, you cannot stack what you don't track. In order for you to stack it, you must track it, okay? It's only just a few minutes, all right? Just take a few minutes to compare your actual monthly expenses with whatever you created in your budget, and that's going to show you the areas where you did well and where you need to improve. This is not a time to be beating yourself up. It's all about leveling it up, okay? There's always an opportunity to level up, because I know that, once again, people who do okay want to do better, and those that do better, that do better than most, want the best. Okay, so that's what we want to be able to provide here to do that. All right, next slide, Denisha. We can go right into it. All right, so how do we stack cash to build wealth? Now, it's all about knowing the rules to the money game. Once again, you thought it was going to be about budgeting. No, we still like to add in some money concepts, because again, in order to be able to set aside cash, you got to figure out how you can keep it. How you figure out how you can keep it? You got to have a budget. It all ties together. That's how we like to do. You want everything to kind of work together in tandem. Let's talk a little bit about how you can stack your cash to build wealth. So let's go to our old friend, the Rule of 72. Now, again, some of you guys that have been regulars, that come every single month. Yeah, Lorleen, welcome. So nice to see you on. See, again, she's a regular. She's a big supporter of building Black wealth. Thank you so much, Lorleen. This Rule of 72 is a game changer. This is what got me involved in finance. And you know what? Keeping it 100 with you guys, this rule almost got me arrested. Almost got me arrested. You want to know about that story? Hit me up on my email. I'll be happy to tell you. But it happened with many years ago. Okay, listen, I was tired. All right, I was tired. I was overworked because I had 4 jobs. I don't know if anybody can relate to that. But if I found out someone's beating me out of my money, I'm gonna have a problem. Okay, so I have a problem with that. So yeah, this rule definitely. Uh, so we'll talk about that another time. But yeah, almost got me arrested. All right, here we go. But don't nobody go out there doing what I did and getting themselves locked up. Don't have orange be your new black, okay? All right, so Rule 72. You can Google it. This is out there. They don't teach this in school. This is why we do that here at Building Black Wealth. I go and I teach this to young kids. I did 3 financial literacy sessions this summer, talking all about money. Okay, our babies need to know this. The future generation needs to know this. Okay, it's also called the banker's rule. Okay, so that means banks, insurance companies, investment companies, they all know this rule of money. We are playing the money game, you guys. And the sad thing is that we're playing the money game and we don't know the rules. So we want to teach you the rules here because we don't want no one getting beat. Okay. So this is the rule 72, and what it states is that it's just going to show. Here's the concept. It's just how fast it's going to take for your money to double. Okay. So again, you're out there busting your butt, working hard for your money, risking your health out there with this coronavirus and everything like that. Have people breathing all over you, right? So you're out there, grinding, hustling for your money. Anybody out there got a side hustle? If you got a side hustle, type in side hustle in the chat box. Now, what are all my entrepreneurs? I don't care if you do Lyft, you can do Uber, you sell candles, you do soap. Where are my side hustles at? If anybody got a part-time job, right? Listen, you guys out there working hard for your money. You must try to figure out how your money's working hard for you. Yes, that's right. All the people out there doing their little side hustles. You got an online business, you sell sneakers, you sell music, art, you do hair on the side. Again, you guys out there working hard for your money. You must try to figure out how your money's working hard for you. So this is what you do. You take the interest that you're earning on your money, you divide that by 72, that's going to tell you the number of years it takes for your money to double. Okay. So now this is division. This is why 9 and 10-year-olds need to know this. You guys got kids who are 8, 9 years old teaching this rule of money. I have a good friend. He started off as a client, but I love his family to death. I taught his daughter this rule. She's 6 years old and she knows like the back. I taught her once and she remembered it. We have to teach our brown-eyed babies this rule of money, because the other non-melanated people that they're teaching their kids about money, and our babies need to know this. Okay, they need to know this. So let's say you out there, you hustled up, you got $10,000. Okay, you busted your butt with all your side hustles, you got $10,000, and you want to see how fast it's going to take your money to double. Take 72 divided by the interest rate. In this example, it's 1.5. That means you got to wait 48 years for your 10 to double the 20, because 72 goes into 1.5 48 times. Anybody got that kind of time to be waiting? Anybody? Okay, yeah, I didn't think so, right? That's horrible. Exactly. 3%. 72 goes into 3 24 times, okay? Because again, we taught in school that 24 times 3 is 72. Now you got to wait every 24 years for your money to double, you guys. It takes too long. Okay, banks aren't even listen. There's some banks that out there that they're not even giving 1.5%. However, we here at Building Black Wealth, right, Denisha, we found a bank that's giving a little bit more than that, and that is part of our savings challenge. I believe this institution, Denisha, you can correct me if I'm
Yes,
wrong. You can
it's
unmute your mic and chime
yes,
in.
I do.
I believe that they're
Is
giving a whopping
DCU.
6%. Yeah.
Yeah, so it's DCU Digital Federal Credit Union. They're giving you 6.17% on your first
Wow,
thousand
even more.
dollars. On your first thousand, and then after that it's like 0.5%, which is still higher than what you're getting anywhere else for your savings account.
Yep. Huge. That's a thank you. That's a big deal. Now again, the the language is it's up to 1,000. So no, if you throw 10 grand in there, it ain't getting the 6%. Okay. But at least, but hey, listen, you got an 18-year-old or 14, 15-year-old that's out there working. You got to get in where you fit in, right? 6% on 1,000 is better than no thousand, right? Now let's take a look at 6%. Speaking of which, 72 goes into 6 12 times, right? So now your money's doubling once every 12 years, 10 to 20, 20, 40, 40, 80, 80, 160. But you guys look at 12%. At 12%, your money is a boss at that point. Okay. So all you out there that had on the survey, there was a high percentage of you guys that were bossing your budget and your savings. The question is now, are you leveling up with how on your interest that you're earning on your money? Okay, are you leveling that up? Is your money working hard for you while you're out there bossing for it? 2.5 million, that's a big difference after a 48-year period. That will determine whether you retire with options or your only option is to go back to work. Okay, we want to end that here. This is why I like to cover this rule of money. Once again, if you don't have 10,000, then maybe you need to kind of go in the back in the budget and try to find it. But a lot of times, imagine, next slide, Denisha. But imagine if you paid off your student loans, you paid off that car payment, you paid off your mortgage. Anybody out there that got a mortgage, you need to put it into the chat box and imagine if your mortgage was paid off and you took that monthly mortgage payment and you stacked that aside. Imagine that. See, we covered that in our previous workshop, how you can take your 30-year mortgage and shrink it down. That's why I always said, you guys, go out there, go to our Village Initiatives Facebook page, look at our past videos. We show you, don't listen. Just because they gave you a mortgage for 30 years doesn't mean you got to pay for it that long. But you will do it that way if you don't know the rules to the money game. We teach you those rules here so you can shorten that debt obligations and get to building wealth. Okay, so again, go to our Village Initiative, go to their Facebook page, which is Denisha's company, and this is where we archive all of our videos, and you can go back. And thank you so much, George. George popped that into the chat box, but you can see how you can shorten the length. We do some great stuff, some other past videos on there. All right, so here's another way that you can stack cash to build wealth. So if you don't have 10 grand laying around, okay, what about $25 a week? Once again, $25 a week. If you go through your budget, right? If you go through your budget, when Denisha had covered with you, I thought she did an awesome job, with the slides there, and that she bossed that worksheet. She bossed it. So Matt, so now some of you, if you have a credit card payment and you're paying like $30, they ask for 30, excuse me, but you send them like 150, you're sending them an additional 120. And so stop that if the debt isn't going away fast enough. Also, stop it if you're continuing to use the card, right? Stop that. You're better off stacking that extra. So if you can shave off money in your budget sheet, whether it's your entertainment, get rid of, I don't know, to share someone's Netflix account, get rid of the gym membership. And if you need to get rid of the Audible, maybe go on someone else's or whatever, or maybe cut coupons or do something. If you can find the $25 a week, look at what $25 a week can do, just at 6%, just a 6% conservative rate of return. Okay, so now investing $25 a week or contributing just an additional 1% towards your retirement, even if you just bump up your retirement from 3% to 4% or 5% to 6%, that's a huge, huge way. So leverage all the things that you may currently have in place, like your 401k, your 403b. So let's say you earn 35,000. Okay, even if you just put just bump it up by 1%, that's only like $10 off your biweekly take home pay, you guys. However, but compounded over time, that's an additional $150 extra per month in retirement. You know how many senior citizens right now, people in retirement that can use additional $150? The $150 a month could be groceries. It could be their homeowners insurance. It could be paying for their prescriptions, for their medicine. Okay, so building wealth doesn't require, you don't need major cash. You just need good choices and discipline and time. That's it. Good choices, discipline, and time. And what you do, you let compounding interest work for you while you're working hard for your money. Because if you look at that, it's not just $125 a week, you guys. It's almost six figures. That it's six figures. That's what it is at 30 years old. Imagine if you had a child, or you have a godchild being born today. If you did $25 a week, what's wrong with giving them a check for $49,000 by the time they're 20? No one's doing that enough in our community. It shouldn't be, just for other children who don't look like us. They have that privilege. They use privilege. But this is why we want to give the wealth building tools to our people and our families, so we can get that, so we can stop that generate, so you can have generational wealth and generational poverty. Okay, and generational poverty. Next slide, Denisha, please. Okay, again, so if you're enjoying this, again, other people want to hop on, have them hop on, because we still got some more to cover with you. Okay, definitely have them send the link out, have them hop on, and or have them. You guys can also go to, right, Tanisha, and go to eventbrite.com, and you can pop in Building Black Wealth, so you can kind of get an idea about when our next series is. And then we're also going to give our email at the end, so you can stay in contact with us to get on our mailing list. Denisha, I don't know if you wanted to say anything about that before I go on to the next slide.
Yes, we right now we just have until December up for our calendar. We will be uploading 2021 schedule by the end of this month, so you guys will have that. So you can start pre-registering for all of the great content we have next year, which I'm really really excited about. And the site is rccwealth.eventbrite.com. I'll put that in the chat right now if you want to register.
Yeah, awesome. Yeah, definitely pre-register, pop it in your calendar ahead of time. Again, don't be reactive. Just pop it in there. Be proactive. Just set it and forget it, which we're going to talk about setting and forgetting it in a minute. All right, so let's talk a little bit. So we talked about the money rule, right? Let's talk about the budget rule. This is the rule of 50, 30, 20. Okay, take a screenshot if you want. There's also one of the rule of 50, 25, 25. Again, that there's a 50, 30, 30, 20. There's all these different things. But the bottom line is that the one thing that doesn't change is that 50% of the income, any extra income, should be put aside for emergencies. Okay. Again, this is after all your major things have been set aside, or if you want to use 50% of your income to take care of that. Okay. Again, you got to get in where you fit in. All right, so dedicate 50% of your income to your basic needs: rent, mortgage, utilities, health insurance, and groceries. Again, ideally. Now, we're living here in good old Massachusetts. Unfortunately, most people's mortgage payments and rent are like 80 and 90% of their income. That's why no one can't say. So you guys who filled out that survey and you're like, man, I make good money, but I have no idea where the heck my money is going. That's what usually it's going. It's going to housing. Housing is expensive, right? If you listen, if you guys agree, put I do, right? If you guys agree that the housing here is expensive, put I do in the chat box. It's crazy, but this is exactly why it's important. Yeah, said amen. Exactly. You guys are so funny. I love it. You guys are the best. I swear. It makes all the hard work worth it when we can bring bring you guys value, make it fun for us. So thank you. Yeah, exactly. It's expensive. Okay. Then you want to set aside 30% of your income for your wants. So whether you want to do your Audible, your Grubhub, your DoorDash, if you want to get your hair done, nails done, everything big, whatever it is you want to do, right? You want to be able to do that. However, you got to also make sure that you satisfy the things that you need to do. Okay, so at least 20% of your income is dedicated to your savings because you need to save. You don't have to want, no, you need to save, right? Whether it's money putting into your retirement account or your investments, or your savings account. Noticed how they all have a different category. They're not all the same. People always think that investments are synonymous with retirement. They're not. You can have an investment account that you can enjoy now. Like when I travel, my dividends from my investments pay for my trip. When I went to Morocco and Paris last year, can you imagine? I believe COVID was floating. Denisha, can you imagine that? COVID was floating around in 2019 when I'm over there checking out the Eiffel Tower and looking at camels in Morocco. I could have caught it over there somewhere. But anyways, the idea is that this is what it looks like. Okay, again, this is the rule of 50, 30, 30, 20. There is one for 50, 25, 25 as well, but again, the idea is that a system is better than no system. Okay, next slide. So again, we talked about a little bit about everything. We talked about the rules to money. We talked about the budget rule. We got your feedback on your poll. Now let's talk about the types of budgets, the personality budgets, right? So now, have you ever heard of something called the zero-based budget? Because there are many different budget types that go with different personality types. So this is called the zero-based budget. Okay, so let's talk about what it is, right? So this person or this budget gives every dollar a job. Okay, by assigning all your income to various categories and then tracking your spending to make sure that you stay within those category limits. Okay. So who is this for? People who get excited about spreadsheets and numbers and enjoy the types of purchases that they make. So all you guys that were typing in the chat box, oh, can we get the spreadsheet? This may be you. Okay. Most people, especially someone like myself, where numbers kind of get me all glossed over because my friends talk about that I have ADHD, but whatever, right? That it's just too much for me, so I really don't care about that. but it's still important. But I still have a budget. But I still have a budget. There is one on here that's for people, like myself, that want things a little bit more simple. That's called the set it and forget it. Now, let's take a look at how that works. So you have a broad categories such as groceries, dining out, entertainment, and you set aside that money. However, you can also break it down into subcategories in those broad categories. Okay. So once all those categories are labeled, you set a budget amount for each, and at the end income, okay, minus out those expenses should sum to zero, which means that you given every dollar a job, you know exactly where your money is going. That means that you know exactly where it's going. So if you got 3 grand, coming in, $2,000 goes here, $1,000 goes here, and they all has its place when it comes to your credit cards, your dining out, your fun money, your shopping, your vacation club, everything. It's like it's zero. It all zeroes out when you run your numbers. Next slide, Denisha. Okay, let's talk about the other type of budget. Okay, so if you're not a zero-based budgeting person, your other type that you may be, as soon as it comes up, went too far. All right, so we believe it's the envelope budget. This was me when I first started, because you guys, you're looking at a awful recovering shopaholic, awful. I was horrible with money. Money came in, money went out, and I was leveraging all what I wasn't making on my credit. And I already had 4 jobs. I mean, I was a mess. I was a mess. So let's talk about the envelope budget. So what it is you figure out what you want to spend monthly, and you withdraw that amount from your account, and you divide it up for each of those categories. All right. So who is it perfect for? People who have difficulty, impulse, that's supposed to say impulse online shopping. I don't know what online is, but it's a typo. Sorry, right? So impulse online shopping with credit cards, because that I didn't do online shopping, but my credit cards were like, I mean, all the numbers are worn down. I mean, it's horrible. Okay, but you always got extra. When it's time to hand over that cash, though, I always had an issue when it came to handing over the cash, but I had no problem swiping that card. Okay. So that's who this envelope budget is good for. So you want to figure out what type of transaction that you're going to do, and you plan on paying everything else in cash. So this is how it works, you guys. Let's say you have $2,000 monthly. $800 goes for rent and utilities. $300 goes to your cable and your cell. $100 a month, example, goes for a new car, and $100 for emergency fund. So once you add all that up, that leaves like $700 in cash, cash allowance. So that 700 cash allowance, if you gave that to me, I was hitting Newberry Street. I'm just telling you where I came from. That's not what I do now, but that's the life that I used to live. I mean, looked fly, but was broke. Okay. However, so now what you do, better strategies, what you do is you get an envelope and you label it. You label it with the category, okay? And you put the cash allowance in that category for that envelope. So for instance, so you might need, gas money. So you label it, this is gas money, and you put that money in there, okay? Groceries. You have a grocery. I know some old schoolers used to do this, especially if you're like baby boomer generation. Sometimes the old schoolers used to do that, right? You get an envelope, you throw money in there for your groceries. Could be for shopping, could be for dining out. Okay, so now what happens is that when you have those envelopes in there, it's different. Now, again, what's different about this is that when you see that cash flying out, I'm telling you, you don't see it when you're swiping the card, but it creates a different feeling when you see your $100 drop down to, exactly, it does hurt, right? Exactly. When it goes so you guys know, so you guys must have been part of that envelope gang, right? That was me. So again, so the good thing about this type of budget, it's all about the accounting for the transactions. It takes care of itself, because you can actually hold the cash in your hands, and you instantly see how much you have left, and you put a halt on your spending. So this might be you, or you might want to use this as a strategy. If you're like used to be like me, that impulse shopping. Let's go to the next one. You got 2 more. All right, so this next one is the set it and forget it. You just want to automate it. So now I've graduated from the envelope to the set it and forget it. I don't want it to come through my hands. I said I was a recovering shopaholic. I didn't say I was recovered. Okay. I don't want it come through my hands and I have everything also zero out. So I marry the zero budget and the set it and forget it together, and it works like a charm for me. Okay. So let's talk about what it is. You automate your money for fixed expenses and any savings goals, and you spend the rest. Okay. So again, it's perfect for folks who want to keep things simple and hassle free, who have money to save but need help prioritizing it. Okay. So all you do is you set up various accounts, and that helps keep you organized. So example, let's say you got $3,000. You divide it into three categories, right? And accounts. Okay. So you got $1,200 to basic expenses. You got $800 for your future savings and goals, which leaves you $1,000 to spend on whatever you want. Now, as long as you make sure you're only spending what's in that particular account. Okay. So now, because you'll be in good shape because your savings are already taken care of. So let's say, based on that money that I just mentioned, $1,200 goes for all your reoccurring expenses. Okay, that means that they're gonna keep coming back. Listen, once you pay your rent in October, let's do again in December. I mean November. Same thing with your mortgage. It's reoccurring. Car payment. It's reoccurring until you pay it off. Car insurance. Even when your car is paid off, your insurance is still reoccurring. Okay, so you want to create a savings account for those expenses. Okay, and you automatically transfer the money from your paycheck each month into that account. So if you total up all those expenses, you minus that amount, you throw that money in there, and you just set it and you forget it. So you put in just enough to take out the amount of totaling those bills. Okay, make sense? All right. So now for your savings goal, same thing. So you got $1,800 left. For the savings goals, you contribute $150 a month to your travel fund. You do $100 a month for your security deposit, maybe on a new apartment. Which by the way, we got some real estate people here. Again, Denisha is licensed with real estate, and so isn't Britt. You guys looking for a house or an apartment? Definitely reach out to them. Okay. All right, $400 a month you want to go to your retirement, and $150 to an emergency fund. Okay, again, each of these savings goals should get its own account. Okay, as well as set it and forget it. So now it allows you to put money aside before you start spending everything, and that's how you start stacking your money up. Because once you put it on set it and forget it, you can then see it really stacking up despite whatever you may do. Next one. So this is the last one. Oops. The survival budget. This is where right now, again, I didn't say everybody. I said that there are a lot of people right now in the survival budget because they're trying to stay afloat, living on their unemployment or their severance or their hours being cut. Okay, so this is a way of cutting expenses and prioritizing your expenses. So this is for people, again, who are anticipating a major drop in income, a layoff, any unexpected health issues, or those who are already living check to check. Okay, so this one is a little bit more difficult because a lot of times you guys feel like it's tough, to make ends meet. Okay, because money coming in, money going out, you're not really sure what to do. There's always something that always comes up. Anybody feel like that? You got money going in, and something always comes up. Okay, so this may be something for you. All right. So again, these things may come up, but you want to put away money, but you're like, listen, I can't even worry about my retirement right now because I got to put food on the table. Okay. So now, however, these are things that you can build awareness about where your money is going, and make sure to build good financial habits now, so that when you get caught up, you'll have all the good habits in just working in your favor. Okay. So again, the first step, regardless of your current situation, is to figure out where your money is going, and if you're using a debit or a checking account, consider maybe even getting a budgeting app, which we're going to share with you in a second. Denisha already shared with you, for those you guys who love spreadsheets. Again, there's always a way. Okay, there's always a way that fits your budget and your personality type, and it goes to your budget. So what you want to do is enter in all your bank information, okay, which is inside that app, and it'll automatically download all your expenses. And that way you can kind of see already the predetermined categories, just like that spreadsheet that I give to my clients. It already has all the predetermined categories and all the subcategories that go within that broad category. Okay. Again, you can create a spreadsheet of you if you have one that's already working for you. Perfect. If you want to level it up, we'll be happy to share that with you. Right now, you divide your expenses into two big categories. Okay, so your must-haves, which is your rent, utilities, groceries, toiletries, and your debt minimums. Okay, and everything else in theory. Right, then you can everything else you could just cut out. Okay, cut out the everything else category because it hardly works. Because it hardly ever works like that. We still got to give something, some type of, yes, you can get the slides. We're going to send these slides out to everybody as well. Okay. All right. So now that will only work in a perfect world if we had like no luxuries. Okay. So again, so it's easy to blow your budget on something that's expensive, especially now if you're stressed. There are a lot of people that are stressed about their health. They're stressed trying to figure out if they're next to get laid off. The time right now through COVID has just been absolutely awful. This is why we chose to keep the seminars going, and to actually go out there and to still give you guys the value that you're looking for, to be able to help you to do what you got to do to stay on task with your budget. Okay, so now look for all the must-haves that aren't really must-haves. Okay, because we think that we must have that full cable package. You may not. You may need to trim it down. Okay, or what about that fancy or that big data plan that you got on your cell phones? Your cell phone bill is coming in at like $150. You may want to scale it back to see if they're offering a deal to maybe bring it down to $100. So now you got $50 freed up. Okay, Hulu, Netflix, Spotify, all those type of things, that we may sometimes think is a must-have. Well, we may have to get rid of some of them again, just temporarily, just to stay ahead of the game. Okay, and then also, what about stretching your meals? And listen, I come from a West Indian family. We used to make big meals on Sunday, big meals on Sunday. Anybody else out there whose parents are immigrants, you can put me. Okay, if either you came from an immigrant household, or if you're an immigrant yourself, hey, there you go. So my Caribbean folks, my African folks, what's up? So again, you can make, even from the South, right? Make those big Sunday meals. Okay, so that way you can. That's right. Bring your lunch to work, right? Brown bag it. Dominicana, hey, mi gente. All right. So again, you stretch your meals out. Cook a big meal, and you just kind of have that last, for a few days. And especially now more than ever, home cooked meals are the best. So there's some pluses and minuses from this whole COVID thing. Okay. So if you are, giving all these restaurants lunches, your money, now you can help save money because you got your own cooked meals. Especially, I think a warning came out with, I don't know if you guys saw that, with, there's another warning with the romaine lettuce of having E. coli, because people are home, they're eating more, and they're mass producing food, and some of our food has been tainted. You guys got to be very careful. Again, the world is different. We still want to show patronage to restaurateurs, especially Black restaurateurs that are out there,
Thank
or
you.
any type of restaurateurs that are from people of color. We want to support, but it's got to just be mindful
Oh
of,
yeah, I
of
think
that.
the
Okay.
seats are wet.
All right.
Yeah.
Somebody, if you can
Yeah, I'm gonna sit in the back. Yeah.
mute your mic. All right. All right. Here we go. Also, too, get a side hustle. I know that we had a lot of people chime in. You got the side hustle gang that's out there earning extra money, or part-time income. Again, it's really easy to get depressed, to feel bad about living check to check. Okay, but again, it'll take time. Everything takes time. But the idea is that, not to knock yourself and beat yourself up. You guys, this is a time more than ever to be kind to yourself, especially kind to others. All right, this too shall pass. Right, this too shall pass. All right, next slide. And we are going to answer some questions coming up soon. Okay, so definitely continue to pop those into the chat box. I know a lot of activity has been going through that. I've been seeing some things come up. These are some budgeting apps. Again, if you're not a spreadsheet type person and you want to, these are just three. There's a website out there called NerdWallet, and they praised these three here. And these are free. These three are free. I saw some other ones that looked awesome too. There's even one I saw that I may even go check out again, that was all for organize investments and stuff like that. Because I always like to, not saying I'm going to get it, but the idea is that I still like to learn and see what's out there, just in case I run into somebody that has it, I know how it works. But mint.com, good budget, that's a pretty cool one. And Clarity Money. So again, these are just 3 examples of some budgeting apps that may help you along your budgeting journey for you to be able to track your cash and stack your cash. All right, next slide. Is that hello? Next, you good?
My computer's freezing. Bear with me.
Oh, okay. I think we're almost, yeah. So that's the end. So again, listen, 2020 has been absolutely crazy, okay, but we're we're almost there, okay, we're almost there to a beginning of the new year. But you know what, you can still start NOW to make some changes to kind of build up some momentum for 2021, right? So this is why we wanted to do that, especially now with the holidays coming up. People may need some extra money for Christmas, so they can have a cash Christmas, not a credit Christmas. Have extra money, for Thanksgiving. So we hope that you found some value in some of the slides, and that you may have learned a couple of things. You can feel it, because if you have, definitely pop that into the chat box. Again, we welcome all feedback. That's what helps keep us staying on our toes and helping to level up. And so that you're not thinking that, oh my God, this was a waste of time or this was boring, that you actually learned something and it may be helpful to you or possibly helpful for others. But in wrapping up, these are just some personal finance rules. And again, you guys can take a screenshot. I'm not going to even bother reading, all this. Thank you guys so much for the feedback in the chat box. That makes us feel good. Again, we don't want to just be giving you information. We like to still communicate with you. So that's why we love the conversation and the back and forth in the chat box. Okay. And then thank you for those guys who are great with budgeting and you're popping in some tips. Again, this is a collaborative. We need to get back to our ancestral roots and being communal people with us working together. So I appreciate all you guys that are also putting in your personal feedback in the chat box about your journey with some of the budget sheets, or even your journey if you worked with one of us, either myself or Denisha or even Britt, of getting your money right, and also your experience with some of the apps that you may have used. I appreciate that. So again, you can take a screenshot of this. I'm not going to read it because I want to take the time to get to your questions, and to also to get to any other feedback and things like that my co-collaborators may want to share. So thanks, everybody. All right, Denisha, you are up, and so we're going to take some questions.
Okay. Anyone have questions?
Yeah,
I'm gonna go back and look at to see from the past.
Yeah, and Britt, if you're out there, if you have an opportunity to help, because Britt's also the question gatherer extraordinaire out there. Thank you so much, everybody, for the feedback. We really appreciate. The only reason why we're here is because of you guys. We are so grateful and thankful for all the support, especially when you pay it forward to your loved ones who are out of state. And if you're out of state, definitely type that into the chat box and tell us, where you're zooming in from, unless we just got the Boston gang, which is okay too, right? We don't care if Massachusetts representing, but if you got some folks that some people sometimes hop on. Wow, Chicago in the house. Hey, that's what's up. Chi-town. Okay, that's cool. Love it. Nice. Got Georgia. Hey, Cookie. Nice to see you. I'm glad you were able to hop on. All right. Hey, New Jersey. That's what's up. It's great. Thank you. This is awesome. And again, in the chat box somewhere, buried in all there is the link, you guys, that you can send out to your family that's out of state or in the state that you're at to please plug in, because Boston, because again, we want to make sure we're not just keeping this local. We're going national. I am licensed in multiple states, and Nisha's licensed in also in another state as well. Okay, so this is not just subject to Massachusetts. Wherever our people of color are at, we want to bring the value. That's what we do here. Okay, that's what we do here.
Yes.
All right, Denisha. So if you want to go through the chat box, yes, we're going to start answering some questions.
So the question I have here, wait, let me go back. I just lost it. Is a secured loan better to build credit than a revolving line of credit?
Yeah. Okay, so you can most of the secure. It's a great question. You can get a secured card, which is different than a secured loan through your credit union or bank. Okay. If you're getting a secured card, that's revolving. If you're getting a secured loan or secured line of credit at your bank, um, that is not revolving. It is a fixed simple interest. That's why the rates are so low. You can get, I think you can get one for like 4%. Definitely. This is why I love credit unions. If you have a credit union or you don't have one, find one in your community. Okay, find one in your community and get one. I advocate credit unions because I had a fancy bank. Remember, I told you I almost got arrested, right? Remember, I told you early in the beginning. Listen, I established your see when you belong to a credit union, you know, you're not just treated like a large massive number. Okay, they have all kind of credit builder programs. They even have one if you did bad with your checking and savings account and you bounced a lot of checks and you couldn't get one, they even have some of them have I think One United has that too, but where you can get a checking account to kind of reestablish yourself. Okay, so you can reestablish yourself. So a secured line at a bank is better than a secured revolving credit card all day long because the interest rates are lower. There's no application fee. Again, you got to get in when you fit in. Capital One does have a decent one, have a decent secured card. There are two of them. There's one that's not so good, and there's one that's better than the other one. But both rates are really high. The reason I like that other Capital One is because if you put in 100, guess what? They match you. I mean, that's like free money. Okay, so check out Capital One, and you can go on their website and go check that out. They should be kicking me back money because I've been referring that like crazy. But anyways, go ahead, Denisha.
I'm going to stop and say Nancy shared with us a resource. If you're a renter and you need up to $4,000 for rent arrears or for future rent, please visit boston.gov/rental-relief. I put it in the chat. Nancy also has it in the chat. Thank you so much for that resource. And I will also send that in the email follow-up.
Oh, awesome. Thanks so much, Nancy. I believe that Nancy was on here on our last one. We appreciate that, Nancy. Thank you so much for that support. And see, this is why I love the Building Black Wealth. We always have someone here that pays it forward. Listen, you guys, type in the chat box, thanks, Nancy, because again, she's always dropping valuable gems, valuable resources, and even if it may not be resources that we need, it's not about us. It's sometimes it's all about someone else. So definitely, thank you. Yeah, see, look at Nancy, all the information coming through. We appreciate you, Nancy. Thank you.
Okay. So I will share that in the follow-up email. The next one was regarding the 30%. So why should we keep our credit balance on a credit card at 30% or less?
Okay. So and this is not a Building Black Wealth thing. This is based on the credit bureau telling you how you can guarantee that they're going to give you a good score. Okay. And we're just sharing with you in case you didn't know. That is the rule of the credit bureaus. If you stay under 30%, 25 or better, okay, 25 is better, 30 is cutting it close. If you stay between 25 to 30% utilization, you won't compromise your credit score, okay? If you're over 30% of your credit score, of your credit limit, of your credit limit, you kill your score because you're using too much of your line of credit. Example, let's say your limit is $1,000 and your balance is $900. You're using 90% utilization. You're killing your score. Every 30 to 90 days that you stay over 30% of that utilization is your score. Okay, so you don't have to necessarily pay off a credit card debt all the time to try to bust your butt to try to get it paid off to build your credit score. If you just got all your credit card balances between 25 and 30% utilization, your score go up. You can have 15 credit cards. Okay, you can have 15 credit cards, but if they're all maxed out, that's a no-no. But you have 15 credit cards and you're under 30% utilization, that's, I don't advocate having 15 credit cards, okay? Because that's also doesn't look good. However, but you gotta they pick and choose. They rather have you have 15 credit cards under utilization than your credit cards being completely maxed out. But that's a good question. But that's not something that we set. That is what the guidelines are, which we again go to Our Village initiative on their Facebook page. There's some archive videos, and we talk all about that. We did one, I believe it was this year in February, and we teamed up with Boston Builds Credit that came in, and it was like 2 hours like worth of just gems of everything about credit. No credit, good credit, how to pay your house off, student loans, I mean, all kind of stuff. So again, go to Our Village Initiative, the Facebook page, and check out the archive videos from the seminar series. Okay, what's next, Tanisha?
That was it for questions, unless people have any others. I did get a request to go over the savings challenge again.
Yeah.
And again, you register now. So if you go to buildblackwealth.us.us, you can pre-register for it, and we'll send you the details for everything because we're making the videos to kind of walk people through. It will officially launch for January. So January 1st is when it actually starts and when your deposits count. What we want is for you to create a budget, figure out how much you can consistently save every month. So if by doing your budget, you figure out, well, I can save $50 a month. That's the most that I can save right now because I'm trying to pay off debt first before I do anything else. $50 a month is what you can do. Then we want you to set that to that bank account, set it and forget it. So it's $50, at a minimum should be in that bank account every month. And then any extra money that you can find to save, we want you to dump it into that account. Once you do that for 12 consecutive months, so from January to December, then you're eligible to win an additional $1,000 towards your savings goal. So right now we only have it $1,000. We're trying to get more sponsors. So if we can have more cash prizes to help people get to their goal, we want to. Our goal for 2021 is to have at least 250 people register and participate in the savings challenge and save at least $1,000. If we do that, we can save $250,000 as a community. That's $250,000 that we could do just by being disciplined, and not even putting a lot of work into it. And I think that's more than doable. So we definitely encourage you to share it with your friends and family so that they can join this savings challenge, so we can see how much, if we actually put our minds to it, how much could we actually save in a year.
Exactly. And again, 1,000. Imagine again, you put away 1,000, and you have the opportunity to possibly get another 1,000. So I believe, and again, we wish that it was everybody to be able to kind of double to be able to double it into match it. It's just gonna be a lucky recipient. But I know Denisha's working really hard. Again, so she's worked so hard on putting that together, just to make sure that individuals, again, that you at least getting some type of opportunity to have some type of savings. And again, and even if you feel that you kind of have a good grip on it, maybe share it with somebody else that again, and you can help them. Again, it's all about paying it forward and helping each other out. And just so you'll know too, you guys, they're in the chat box. There is a link to a survey. Again, the survey helps us continue to level up. We do listen to feedback, good, bad, or indifferent, because again, that's how we level up, right? We're not looking for everybody. We know we're not here to please everybody either. We can't please everybody, but there's still nothing wrong with us leveling up. Doing better. So definitely, if you go through the link in the chat box. And Denisha, I did see a few other questions come through. I believe that someone had asked something about DCU. So if you can help me go through that again, and then ask me some of those questions, and that way I can get to make sure, we want to make sure that everybody's questions get answered while we still have the time, a little bit of time before we end this evening.
Yes. So I did put it in the chat. I put the link. It's dcu.org. They have the 6.17% on your first $1,000. So it's only on $1,000 would you get that. So that's what, $60 you get for saving. So by doing nothing else but saving, you get $60 at the end of the year, which I think is great. So that's what DCU is offering. After that, I think it's 0.5% interest on the balance. So if you save $5,000, on the other 4,000, you'd be getting 0.5% interest on it. And then I will share the savings spreadsheet. You're gonna get that with the savings challenge, but I will send it to you guys when we send out this email now, so you can get a head start on everyone else.
Yeah, and please make sure that you're registered. And I believe that Denise, again, here's our emails if you want to stay in contact with us. If you want us to, help you with your finances, get your money right. Maybe you have some debt challenges, or you want someone to look over your retirement and try to figure, okay, can I be adding more? Something I should do? Definitely send us an email regarding that. If and again, if there are other family members that you have that you want us to get on the you want us to reach out to them to get them on the mailing list, again, send us an email, or better yet, email Denisha so she can get them on the email list, so they
Yes,
can
please.
plug into our Building Black Wealth series. Okay.
Yes. So if they sign up on buildblackwealth.us, then I will have their email address. It will also ask for your phone number, and I don't stalk you, I promise. This is so that if we have any questions, we can follow up with you. And again, someone asked kind of how does the challenge work? If you can put a big lump sum in the beginning and then kind of make smaller deposits. Yes, you can. We are looking for more so what's the minimum. So we are going to ask whoever the lucky person is at the end of the year, and even throughout the year, to see your budget that you created, because we want to make sure, again, it's not just about doing the bare minimum. We actually want to change and transform your financial health. So we want you to show us your budget spreadsheet that you create, or your app, whatever, wherever you have your budget, so we can compare that to what you're actually saving. Because I do know some people, it's like they can get, let's say you get $1,000 for Christmas in terms of all your gifts. You put that into the account and that's your one deposit for the year, then you're ineligible for the cash prize because you only made one deposit for the year. We want to make sure that you're consistently making payments, and it should have at a minimum the same amount every month, and then you add more to it as you go along. Let me see here. In the interest of supporting Black businesses, what other good services offered at, I'm going to say One United, that we should take advantage of? One United, they have, I forgot the name of it. They have a credit card. So if you have poor credit, they do have like a build your credit card. I can't remember the name of it right now. I'm blanking. But what I did hear from people who have used it, you can't make automatic payments. You have to call in, or you have to mail in your payments, which makes it difficult for people when they want to automate. So I would have to follow up with One United to see if they've resolved that issue yet, because that was a huge complaint people had last year with the One United credit repair card.
Yeah, and that's the thing. So when we shout out companies and things like that, it's because either we personally have taken advantage of them, so we know how it works, or someone that's in our network, or especially myself, who is a financial analyst, and my clients give me feedback and what my clients have done. Yeah, because again, we want to make sure that if we're gonna lead you to somewhere, that we're speaking from fact, not theory, about how the things work. So that's why when I name dropped Capital One's credit card, I did it for a reason, because I know that it works, because I helped several family members and even some clients be able to help build their credit, through that. Again, nothing against One United, but again, we want to try to make sure that when we advocate goods and services here, that the results are there. we do know that they have, I believe, Denisha, you can help me with this, but I believe that they have an excellent mortgage program for home buyers. Again, this is not the subject the night to talk about it. We did cover that. And again, if you go to our Village Initiative Facebook page, we talked about a lot of mortgage programs that are just giving all kinds of money for like down payment assistance and closing cost assistance. It's crazy. And I believe One United um, offered one of those Stella mortgages.
Yes, so we will go over a few of the, I think later on next year, I can't remember, but maybe March, the mortgage products. The city
Mhm.
of Boston has the One Plus Boston mortgage program. And I would say that right now, if you're trying to buy in the city of Boston, is hands down the best loan
That's
out
it. Yep.
there.
I apologize. Yeah, I misspoke. That's what it was. The One Plus, not the One United. I apologize.
Yeah,
That's
it's
the One
so One
Plus.
United is not a part of that. So for that one, it's Santander, Cambridge Trust, and Boston Private Bank.
Oh
There
yeah,
are
I know
only three
Boston.
lenders right now that work with it, but the interest rate is like 2%. You can get up to $50,000 in financial assistance from the city of Boston. It's you don't have to pay PMI, which is like extra insurance when
It's
you don't put
huge.
20% down. So it's a really great program. We can tell you more. You can send me an email and I can describe it in depth for you, but it's a really great program if you're trying to buy in Boston. Outside of Boston, there are other programs available. It's just specific to your situation and your income.
Yeah. So once again, you guys, that's why it's and thank you for hanging in there because again, this is where usually we start adding in extra gems. It's always close to the end. And that's why we appreciate those that always hang on. You got and who are regulars, you guys know that we always drop all the extra gems getting close to the end and talk about what's happening next. That's why it's good when you hang in there because you can get other info. Okay. But definitely stay in contact with us. Our emails are all there, and again, that way you can, and then make sure you pre-register so you can get the link and get on the mailing list. Again, please, if you found value in this, please pay it forward to other individuals that want to benefit. I mean, because again, we got to get back to taking care of each one, teach one, right? I heard that from one of my good friends, her spouse, who's also a good friend, and I never forgot that each one has to teach one. We got to look out for each other, okay? So definitely, again, Denisha, I see some things coming through, but I don't know if there's any more questions or if they're just comments. But if that's the all the questions that we have, we're gonna end for the evening.
Yes. And if anyone has any connections with banks, definitely share as we try to grow the savings challenge, but also find out what programs they have. Like I'm gonna be transparent. Like I wish One United had the same offering as DCU with the 6% on your first $1,000. Like if they could match that, hands down, I'd switch over to One United. So it's really trying to figure out how we can get these programs. What I do is try to find the best resource for you guys, so that you're growing your money and you can take the money that you've grown and you've saved and you want to invest and invest that into our black and brown businesses around Massachusetts. But my goal is to really figure out how can I help you maximize so that you can pay it forward in your own way. And then if we find companies that we can partner with, then that's what we do and that's what we make a priority for. We'll always promote black owned businesses first. I'm not apologetic about that. But if it's not available, then we try to make sure that we're helping you maximize on kind of accomplishing your goals.
Yeah, absolutely. And Denisha, I have a question for you. So since
Yes,
we
ma'am.
do have people that are here from out of state, now technically, where there is a lot of online banking, what if somebody that wanted to participate in the savings challenge that's out of state?
Even if you're out of the state, you're still eligible. DCU is not limited. I don't believe they're limited to Massachusetts only, because they're outside of Massachusetts as well. And it's an online savings account. So it should not be limited to just Massachusetts residents. So you can
I
participate there. I encourage people. I mean, if you find, I'll go online and look. If you find a bank that's not in Massachusetts that gives even has a better incentive, let me know because I'll add that to the savings challenge. Because again, the goal is to really help you guys maximize. Because you commit to saving at least $1,000, you get an extra $60 at the end of the year. So for participating, everyone wins because everyone gets an extra $60 at the end of the year.
Right. And however, and then the lucky person
And
gets
then the
the
one lucky person actually gets $1,000,
it's a
but everyone
thousand
gets
dollars.
$60.
Yeah,
I think that's
everybody
cool,
gets 60. Everybody gets 60.
right?
But again, I just want to preface, like Denisha said, we want to see the consistent savings. It's not just taking $1,000 and throwing it into the account. Okay, it's the consistent,
Yep.
Again, we know not everybody's going to take the challenge, and if you don't participate in the challenge, that's fine. Do your own challenge. You can do that
Yep.
52-week challenge that everyone does, at the end of the year, for the beginning of the year. Okay, we're just talking, for those, again, if you got a child or even yourself, if you're not good with savings, you're not good with budgeting, you want to get better, this is why, we're here to help you, do that, with the spreadsheets that Denisha put all that time and effort into to help keep you organized. Okay, so that way you can track your money and things like that. Okay, and then again, it's systematic, consistent savings, over time, and that you do for a 12-month period. And then, again, one lucky recipient, who again follows again. Denisha's going to go over, more of that when you stay in contact with her, you get more information for those of you that may have come on late, regarding that. Okay, but
And
this is
one
her.
more, yep, sorry.
Yeah, no, I'm saying, but this is her baby. This is what she put a lot of time and effort. Takes a lot of time and effort to contact those banks, especially, we know that banks aren't giving high rates of return. It's usually the investments. That's why I come in. Okay, I'm the investment person. They give you that 6, 9, 10, 12%. That's my specialty, right? However, in order for you to be an investor, you got to start off by being a good saver. Okay, that's why I put out the savings challenge. Again, we want to marry the two together. But go ahead, Denisha. What was that?
Yes, someone asked if they have to create a new account or if they can use a savings account or an account they already have. I prefer that you create a separate account because we want to track everything related to this savings challenge. So
Yep.
I don't really want to see all of your other savings goals. I want to see kind of pertaining to this, how much you're able to save. Because when we verify at the end, I'm going to ask for that bank statement. So if you don't want to share that bank statement with all your other money, we want it to be separate. And again, when you're saving, it's supposed to be money that you don't have, to me, easy access to it. So I want it to be something where you're not just able to go in and take money out. So having it be separate, the goal is, or for me, hopefully you kind of forget that it's there so that it can just multiply.
Yeah, absolutely. Um, and again, if so, we're gonna listen. We definitely appreciate all your kind words, all the support, all the feedback. And again, if you guys want to support, us, there is a, Janisha, you can talk a little bit about that again to help us to continue, because we are going to be bringing in some other speakers. I mean, we got an unbelievable lineup, for 2021. And that way it'll help us, cover some costs, of the speakers, things that we bring in. If you want to support that, that's great.